Hey, what's going on, guys? This is Blood Phantom 81, and today I want to talk about what's been going on with the US stock market and what are the long-term implications of what's happening right now. So, in case you guys weren't aware, the S&P 500, the Nasdaq, the Dow Jones, the Russell 2000, global stocks, there's kind of a global meltdown right now. Today was probably one of the worst days I've ever seen in the US stock market. So I want to talk about what are some of the long-term implications of what's going on today and last week. So let me just put it in plain English. I do not think that this is the first step in a recession. And even if there was a recession around the corner, I think given what we know today, I think there's no reason to be concerned. So let's say I'm wrong about that. And let me just further explain that. So let's say I'm wrong about that, and let's say that there is a recession coming around the corner, let's say next month or in 2 months. What I'm saying is, with what we see right now, there's no indication of that. So let's go ahead and look at some charts and see what I'm talking about. So this is the S&P 500. Today, like I said, was one of the bloodiest days I've ever seen. I think from the open to the close, actually I have it right here. So S&P 500 lost 3%. NASDAQ lost a whopping 4.44%. Crazy, crazy day. But let's talk about long-term stuff. So this is a daily chart. This magenta line is the 200-day moving average. And guess what? On the S&P 500 and the NASDAQ and the Dow Jones, we are all currently above this moving average, and it's sloping upwards. That tends to be really good for something like the US stock market because, like I said, price action tends to be above this magenta line. If we zoom out a bit, there's been a couple periods in history where we actually broke below it and kind of meandered there for a while. So this was the summer of 2015 all the way up to 2016. We broke below the 200-day moving average, and we didn't actually recapture it immediately. We actually hung around there for a while. We are nowhere close to that. And even then right here, we still didn't have a recession. This was kind of like a 12-month or 11-month bear market because we didn't have a higher high, but this still wasn't a recession. We're not even there yet. We're not even below this 200-day moving average, okay? We'll see if we can have a gap up open tomorrow. But either way, I'm a buyer at these levels. So yeah, let's go ahead and take a look at what 2008 looked like. So 2008 was the last recession. And guess what? Before we got into a recession, price action went below the 200-day moving average, which is this magenta line. What characterizes this as a recession versus something like this is the discrepancy between these two moving averages. So they actually started to slope horizontally, and the distance between these two lines got smaller and smaller before we finally rolled over. We do not see that. In fact, the distance between these two moving averages is quite significant, and they're both sloping up pretty significantly. Now, moving averages are used to determine trends, okay? They're not necessarily forecasting, but they do determine trends and the strength of trends. Looking at something like this, these moving averages clearly have some sort of, support level, whether it's inherent or not. Price action tends to be above the support level, and when we go below these support levels, price action tends to do really bad things. So I'm not, I don't think these things are necessarily magic. I just think it's a very objective way to determine the strength of a trend. Let's actually look at one more thing, which is I'm going to throw on not just the 50-day moving average and the 200-day moving average, but I also want to throw in the 100-day moving average. So this is the S&P 500 in a long-term view. And these are three different moving averages: the 50, the 100, and 200-day moving average. They're all sloping upwards, okay? Once again, let's think about what happened here at the 2008 recession. they all started to slope horizontally before turning over. We're nowhere near there yet. So I don't think there's cause for concern. The last thing I want to show is if we just get rid of price action and look at this completely objectively. So let me see if I can, there we go. So this is what we're seeing right now. All three lines are sloping upwards, a lot of distance between them, and the slope is pretty strong. So for those of you that remember calculus or derivatives, this is the slope of the prices, which is doing pretty well. So yeah, I think that's pretty much what I wanted to talk about. My laptop's gonna die obviously, but I think we're in pretty good shape. I also want to show my account history recently. Obviously, I've been doing a lot of deposits lately. I have some pending orders of JP Morgan Chase, QQQ, Apple, NASDAQ, and just today I've been buying nothing but, you know, tech stocks, financial stocks, and market ETFs. So Visa, QQQ, SPY, Netflix, Square, MasterCard, Nike, Microsoft, Netflix, Visa, MasterCard, Nvidia, Nike. The list goes on and on. I don't know how much in total I've bought recently, but I am pretty heavy in the market. I think, yeah, it's definitely a risky thing to do. I'm not going to deny that, but I am going to be watching the market very closely because I think we're at must-hold levels, to be honest. So once again, the price action is here at the 200-day moving average, which is quite significant. And yeah, like we'll see if it'll hold. I think my stop will be somewhere around like 27.40. So if we break below 27.40, I'm probably going to get out of my positions. But yeah, so that's going to be it for this video. I hope you guys enjoyed it, and I'm sorry that today has been such a bloody day. I know like a lot of people are panicking right now, and it hurts to be down. It hurts to be holding through down periods. I definitely don't like that feeling either, but I think we're going to get through this one. I think there will be a worse bear market down the road, maybe around 3 months from now, to be honest. I think it's gonna be really bad, but I'm probably gonna make videos when I think that's gonna happen, and I have some reason to believe that's gonna happen based on Elliott wave analysis, which is something that I do pretty frequently. So I'll make a video of that when I think that's gonna happen, but for now I think we're fine. So yeah, I think it goes without saying, but this is not financial advice, etc., etc. Don't do things just because I'm just saying what I'm doing. So feel free to take it or leave it. But anyway, that's it for this video, guys. I hope you enjoyed it and have a great day.